Can you achieve a perfect credit score? Well, this guy Steve out in Texas did, and I'm going to share with you exactly how he did it. So I was reading the Wall Street Journal a couple weeks ago, and there was this article about this guy out in Texas, and then I saw it again on the Daily Mail, and they summarized the Wall Street Journal article. This guy Steve Michelle, I hope I said that right, he's an engineer out in Texas, which I think is absolutely the perfect job for somebody trying to achieve an 850 credit score. He wanted to see how soon and how long he could keep his credit score perfect. If you don't already know, the credit score goes up to 850. In all of my years in the real estate business, I've never seen an 850 credit score. The highest I've seen is like in the 840s, which I think is insanely high. Steve started in the 840s. Wasn't good enough for him. Anecdotally, I always think the people who have the highest credit score are the most protective of their credit score. They want to get that score as high as possible. This guy did. 840 wasn't good enough for him, so he went on an odyssey. What he determined was it's a lot harder to get a perfect credit score, and the benefits are not all that there. But I will tell you, there are serious benefits to having an excellent credit score. And if you don't already have an excellent credit score, you're going to want to stick around in this video because I'm going to share exactly how you can achieve it. First of all, why do you want to have a great credit score? I've mentioned this before. I've done videos onto it. I will link again to these videos. You want to have a perfect credit score for a couple reasons, or for many reasons actually. Obviously, I'm in the mortgage business. The better your credit score, the better your rate is. Here's the thing, the highest credit score in mortgage that we look at is 780. After a 780, you have maximized your benefit. So if you want to have a goal, your goal should be 780. Doesn't have to be 850. Frankly, Steve's going to get the same rate at 850 as he would have if he had a 780. There are other benefits to having a great credit score, and your insurance may be lower. If you're renting a home, you could do that easier. Obviously, you're going to have more access to credit. If you have an emergency and you need to immediately get some credit, you can get that with a great credit score. You will have a much harder time doing that if your credit is poor. A lot of people don't know, but employers lately have been looking at their prospective employees' credit report. You know, I'm on the fence about this. I can see why they want to do it. They want to know that they're going to be hiring a responsible adult, but anybody who's dug deeper than an inch into a credit report can see that there are some, reasons that people's credit tanks. It could be a divorce, it could be, a medical emergency. There's a lot of things that could make someone's credit tank. So whether your employer is looking at that or not is, up for debate, but the fact is they do look at your credit score sometimes, and having a better credit score is going to help you. All right, so back to Steve out in Texas, wanting to achieve that 850 perfect credit score. So you may have heard that having a 30% usage rate on your available credit is one way to maximize your credit score. And that is probably true, but what Steve determined is to get to that perfect 850, he had to keep his usage down to 1% of his available credit. So let's give an example. If you have a $16,000 credit limit on your credit card, you can only keep a $160 balance in order to get your credit maximized. That's probably pretty difficult for a lot of people to do, but if you pay your credit card off every month, you may want to go for that goal. Keep that small balance on there, pay it off next month so you don't have any accrued interest, but you're still getting the benefit of carrying a little balance on your card, and your credit score is going up because of it. Another thing that Steve did was he timed his payments. So this is really important. He experimented with payment timings, and he noticed a correlation to an improved credit score when his balances were paid off before the statement due dates. Obviously, he maintained stable usage of these credit cards. He never missed a payment, of course, and he maintained strict utilization limits, like we were talking about with the 1%, to keep his credit score higher. So Steve did us all a favor, and he achieved that credit score, and we can take some takeaways from him. I want to give you 8 steps that everybody can take right now to maximize your credit score. Step 1, you have to have a copy of your credit report. Everybody is entitled to at least one free credit report a year from annualcreditreport.com. This is the only place that you should be getting your credit report. Please never pay to get your credit report. It is free at annualcreditreport.com. All right, you're going to want to go in there, create an account, put your social security information, and then immediately you will see all 3 credit bureaus. By the way, it's going to ask you which credit bureaus you're going to want to see. You're going to want to see Experian, TransUnion, and Equifax. Get them all because they all report differently, and you're going to want to make sure all the information on your credit report is accurate. You can notice if you've got a credit that's, something on your credit report that is not correct. Maybe you paid something off and you have proof of it, and it's still reporting on your credit report. You can dispute that, you can get that cleared up, and that will help your credit score. Step number 2, sign up for free credit monitoring. There are many places you can get free credit monitoring. Experian has one. myfico.com is another place. Your credit card or your bank may offer this to you. Please do not pay for this, okay? Now, I want you to know when you have your credit score on, let's say, myfico.com, the score that you see and the score that I as a mortgage lender will see when I pull your credit score will be slightly different. A credit score for a mortgage is going to be a little bit lower because the algorithm for calculating a mortgage FICO score is different. Don't worry about that. What you're gonna wanna do is maximize the score that you can see, because if that's going up, then your mortgage credit score is going up. All right, now that you have your credit report from annualcreditreport.com, I want you to print it out and use it for step 3. So step 3 is write down in a spreadsheet all of your open credit lines, all of your available balances, all of your credit limits, and finally, how much interest you are being charged for each of those open credit lines. A lot of people are unaware that they're paying 25% interest on their credit card. They might be able to use a different credit card that they already have open that has a much lower rate. So you're gonna want to pay special attention to that. The best way to do this is on paper. So if you don't have access to a spreadsheet, go on Google Sheets, create a little spreadsheet, or write it down on paper. See it with your own eyes and know how much you're paying in interest. This is going to be huge and eye-opening for you. All right, so now that you have your balances and your credit limits all written down on a spreadsheet, you're going to want to calculate your percentage of usage. And the way to do that is simply to take the outstanding balance that you owe divided by the credit limit. And that's going to tell you how much percentage of that credit limit you are using. And first rule of thumb, keep it under 30%. If you're going for that perfect credit score, like Steve did, keep it under 1%. A simple way to get that credit percentage usage into that sweet spot of 30% or less is step number 5, and that's ask for a credit line increase. It might be a long time since you've gotten a credit line increase. Let's say you started with a credit card and you've got $5,000 limit on it. Maybe you've been with that credit card for several years and you've paid on time. They might up that to $15,000. And then all of a sudden your percentage of usage looks a lot better. Your credit score is going to increase because of that. Step number 6, never miss a payment. I always suggest setting up everything for auto pay for at least the minimum. So that way, if you don't have the money that month to pay the whole thing off, you have at least made the minimum payment and you are never going to incur that dreaded 30-day late on your credit report, because if you start getting those, your credit will drop. I've seen people's credit drop 50 points just because of some 30-day lates, and that is definitely not what you want to do, especially if you're buying a house. Step number 7 is to pay down some debt. If you do have a lot of debt, not only is that a financial burden to you every single month when you're paying those minimum payments or trying to pay it down, but it's just such a burden on you spiritually as well. I really do believe that if you have a clear financial picture, you're gonna have a clearer mind and you're gonna have a clearer heart. You're gonna be able to focus on other things that bring you joy rather than the burden of debt. So if you do have debt, not only is it gonna clear you up spiritually, but it's gonna help your credit score. So start with the smallest balance first. So what do I suggest? There's 2 ways to do it. You can either start with the highest interest rate credit card that you have that you need to pay down, or if you want a little psychological bonus, you can start with the smallest balance that you own and just pay that off. If you have that, do what Dave Ramsey suggests and snowball it to the next credit card and keep going until you have cleared out first all of the store credit cards, all of the smaller credit cards, and then finally you've paid down the major credit cards. And that leads me to my final and 8th step, and that is never close a credit card. Once you have it open, keep it open. They may close it on you, and that's fine, but don't willingly close it, because that can actually lower your credit score. So the credit algorithms like to see that you have available credit and you don't abuse it. They want to see people who are very responsible with the amount of credit that they are given. So if you have a Macy's card, you use that over Christmas, pay that off, keep it open, don't use it anymore. All right, we're gonna minimize our credit usage, only use those major credit cards that you do have, and keep the balance always at least under 30%, ideally 1%, and your credit is gonna soar. And when that happens, you're gonna be in a much better position to buy the home of your dreams. And not only that, you're just gonna feel a lot smarter and a lot better. So tell me, what are you thinking? What do you see happening with your credit score? What's your story? I'd love to hear it in the comments, and I'd love to help you, and I'll see you at the next video.